I'm going to turn things over to our really excellent panel as soon as possible. So I'm going to give some really brief introductory remarks, and then we're going to dive right in. So as many of you probably know, over the past 10 years or so since the great financial crisis, there's been a really vibrant and active public banking movement developing here in the United States. In fact, public banking activists in many other parts of the world are really often quite interested and surprised and really envious about the strength of the public banking movement here in the United States. And again, as many of you probably know, California has really been at the forefront of this public banking movement here in the US. And they're at the stage in many communities in the state where they're starting to actually seriously plan and design what their public banks are going to look like and what they're going to do. For us here at the Democracy Collaborative, we've been really trying to support and amplify this public banking movement for many years. And this is because we really feel that public control of capital at various scales is absolutely critical for the development of a more democratic, equitable, and ecologically sustainable society. We also believe that there really could be a domino effect with public banks in this country once they get started. So it's really important for us to make sure that we're having a really honest and open conversation about how these institutions should be designed to ensure that they actually produce the progressive and radical outcomes that many of us would like to see, and that they don't simply replicate traditional hierarchical and managerial modes and power relationships. And to that end, we were really, really excited to partner with Public Bank LA on this project to begin to think about what a democratic and participatory public bank in Los Angeles would look like and how it might be able to function. And so with that, I'm going to turn it over to Michael Brennan, who's going to really briefly outline today's webinar and get us rolling with our speakers.
Thanks, Thomas. Yeah, thank you everyone for joining. I want to thank this panel. This group's collaboration was critical for the success of this report and this project, especially working with the Public Bank LA team. And before we get started, I just want to make a quick point on the method here to situate this conversation as part of a broader conversation around public banking. So today, Los Angeles and the entire country are experiencing intersecting crises. We have climate change with the West Coast fires. There's a long crisis of racism with a history of economic discrimination for wealth building and otherwise. There's police violence by LAPD attacking activists, detonating explosives in neighborhoods, sweeping and harassing houseless folks, as well as ongoing public health crisis and the economic recovery from the pandemic. I think this conversation is urgent as part of our shared strategies to address these crises and these problems. And this webinar was designed to reflect the setup of the report. Trinity and Naveen speaking on Public Bank LA, Tom Marwah on the broader context of public banking, Rowan Gray on the broader context of public finance and public money, and then Thomas on the broader context of democratic public ownership, and then to be able to move into the proposed design contained there for the Los Angeles Public Bank. Rather than me presenting all of that information, which you can see in the report, I think having us draw out these different perspectives will hopefully make this a much more rich educational event for people. It's worth mentioning that while this panel has some key perspectives on public banks, this is not the whole movement and is not wholly representative of it. And part of my method with the report was to try to interview a diversity of folks to inform what a movement-grounded public bank would fight for. So I hope that that comes out here in this conversation. Lastly, I just want to emphasize that despite the Zoom top-down format here, we're all learning together as we move into what I see as the next phase of the public banking movement here in the US, which is actually winning these first banks in California. There's going to be a lot of lessons to share for our efforts across the country. And as Thomas mentioned, frankly, around the world. This is a long haul project and we should continue building our shared perspectives on this issue. So let's get started and I'll hand it over to Trinity to pick us up.
Great, thanks, Michael. Hi, all. I'm Trinity Tran. I am the lead organizer of the California Public Banking Alliance and Public Bank Los Angeles, and I've spent the last few years working in this space to build banks better. Our work started in the divest and invest movement, and which quickly evolved into public banking, all of which we've done as a volunteer-led coalition. And we do this work because creating publicly owned financial institutions that are aligned with our social objectives, that are rooted in equity, that keep banking profits reinvested in the community, this really is fundamentally transformative work, and it is the future that we deserve here in Los Angeles and in cities across the nation. So thank you, Michael, for your work over the past few months, working with our team and interviewing stakeholders here in Los Angeles. And also thank you to the Democracy Collaborative for supporting this work, which is especially important right now because the California public banking movement really is trailblazing for the rest of the nation. This is a newly emerging movement, and as we help guide it, the governance design is a critical piece of public banks. And as these banks now move from the ideation to the creation phase, now with local governments here in California, from San Francisco to the Central Coast to the East Bay to here in Los Angeles, as cities are moving forward in the early stages of conceptualizing and developing these public banks and taking the step towards creating the municipal and regional public bank business plan, it makes our work in Los Angeles as the California Public Banking Alliance even more crucial as we work to create the blueprint and really help shape the vision for what a just and an equitable and a democratic public bank could be. And this movement really is even more remarkable because it is a relatively new idea that has gained an incredible amount of traction and legislative success within just a few short years. We've moved public banking through the entire California state legislature and passed a bill turning public banking from a policy proposal into a law in just one legislative session. And since the passage of AB 857, the California Public Banking Act, we've inspired movements across the nation. And this really is a testament to not only the power of coordinated and strategic grassroots action organizing, but it's become evident to activists on the ground, to community organizers and legislators up and down the state of California, to city councils from the West Coast to the East Coast. We're working hand in hand with elected officials to implement public banking at the local level, because people are coming to the realization of the incredible transformative potential and the revolutionary power of public banking. It is a powerful tool to be able to divest public funds from Wall Street banks while saving local governments money, and then while simultaneously being able to provide critically needed funding in areas so that we can advance our racial equity and sustainability goals. And as the question now moves from why public banking to how do we make this a reality, it's clear that this really is an idea whose time has come, especially now as we're rebuilding from the pandemic. We're seeing a growing momentum around public banking with as I mentioned, city governments across California and the nation taking the steps towards forming public banks. This long year really has been, I think it's really given us an opportunity to rethink things differently and reimagine alternatives and reprioritize aspects of life. And when it comes down to it, a few things are more critical to control and more impactful than money. A bank chooses to give money, enabling certain enterprises that harm our communities, but it doesn't have to be this way. We can reverse the harm by rewriting the rules of the system and reimagining the role of finance at a local level and how important that can be in using money to reinvest in our future and not fund our destruction. And the public banking movement really began as a visceral fight in the divest movements that were inspired by Standing Rock, where Indigenous leaders were fighting to prevent oil pipelines from being built on sacred lands. And activists organized local campaigns across the country to move city and foundation dollars out of big banks and redirect those funds towards building sustainable and socially responsible investments. And people stood up to big banks with a directive to reclaim the collective public funds that our cities generate. And in Los Angeles, we founded and led Divest LA, a grassroots campaign that within just 9 months of the campaign, we succeeded in moving the LA City Council to disqualify Wells Fargo from the city's commercial banking services because of their substandard CRA rating. By virtue of the city of LA's public funds sitting in a bank like Wells Fargo, we were financing not only the direct harm to Angelenos, but people of color here and beyond city lines. We were contributing to the financing of the destruction of communities and our environment. We formed Public Bank LA during the Divest LA campaign, when we realized that divesting from Wells Fargo, that by divesting from Wells Fargo, the city would just move its money to another predatory Wall Street banks, especially with the size of the city, the size of Los Angeles. There wouldn't be many options in moving city funds. So, well, LA would by necessity have to bank with a large conglomerate bank, and those were the banks only who are capable of managing billions in municipal funds. So without real options in front of us, what we quickly realized was that the only true form of divestment was to move the city funds from Wall Street altogether by creating a people's bank, a bank that would be run with complete transparency, that would be accountable, and that would be guided by socially and environmentally responsible mandates, a bank that would serve the city and its people, whose profits would be reinvested back into our local communities. We shortly thereafter, we led the Measure B campaign ballot measure here in Los Angeles. It was the first voter referendum in the country asking for voter approval to move forward with an LA city-owned public bank. And even without any substantial funding or real infrastructure, campaign infrastructure in place, to be able to communicate to over 1 million voters on a new idea, we still managed to gain 44% of the vote. Over 430,000 people understood the need to create an alternative to Wall Street banks, the need for a public institution. And within the last few years, the activists of the modern public banking movement really have done a profound job of turning the attention of elected officials and community members towards the impact of finance at the local level, building awareness behind this idea that public funds should be determined by the will of the people and benefit the public good. And what has emerged since this growing growing movement is the understanding that another way is possible, that we have essentially been held captive by private banks without an alternative until now. With Governor Newsom's signature on AB 857 at the end of 2019, it legalized public banking in California for the first time in history, and which is now paving the way forward for the future and legitimize public banking as policy, as a common sense, as a practical solution to addressing the harm caused by the mega banks. Our economy, at the end of it, is run by a few banks that dominate and who are looking for a yield. They're not interested in investing in affordable housing in our own neighborhoods. The banking system is not interested in lending to small and medium-sized businesses. It's interested in making money in any way it can. And if we look at what's unfolded over the past 20 years, big banks have been penalized with nearly 400 legal actions, $200 billion in fines for bad practices, which disproportionately affect low-income communities and communities of color. And these are the very same Wall Street banks that hold the deposit investments of billions of California taxpayer dollars and municipal dollars of cities and states nationwide. But we have a way out, and public banking is the future. And we're seeing an incredible amount of movement in the space as elected officials in cities and states are moving towards exploring public banking. And it really comes down to 3 reasons. I'll just briefly go over the 3 reasons here, and Naveen can expand on it in his section. One is it comes down to 3 things. One is low cost credit. Public banks would enable cities access to low cost credit, whether it's small business lending, whether it's creating affordable housing or investments in underserved areas to build the things we need. The question always begins with, how do we pay for it? And a public bank is how we can mobilize and redirect public resources into these sorts of high impact investments. It's currently costing in LA over $100 million in fees and $1.3 billion in debt services. That's the cost of that's what it costs our city to borrow money from private commercial banks. Whereas a public bank can do what banks do, is allow cities to borrow at banker's rate and leverage its funds up to 10 times for lending. 2 is leverage. Saving money, public banks would save money by bringing financial services essentially in-house instead of paying billions to high cost private commercial banks. And by leveraging public funds, we can create the most value for our cities. That means we can make a dollar do more, we can stretch a dollar by keeping it here, by leveraging it and recircling it back into Los Angeles. Cities already have deposits that we need to balance out a public bank loan portfolio. And these banks, these are funds that are right now sitting in Wall Street banks who have no fiduciary duty to reinvest them back into Los Angeles and earns us next to zero in interest. And three is funding local priorities. So a public bank with a local government with its own depository bank can do what banks do, which is create up to 10 times the credit to inject back into the local economy. And this will bring us the capital that we need to support affordable housing, to create below market rate loans, to help small businesses, to invest in projects that actually improve our quality of life at the local level. This is public banking. It's about empowering Main Street, and the need for public banks are immediate urgency because the current financial system doesn't have an incentive to better our communities. It's motivated by how to turn the quickest profit, where money can be made often at the expense of the people. With public banking, we are allocating these public funds to be able to build out a future where our social objectives can actually be met. This is about mobilizing public revenues to serve public interests. And this is the mechanism that we need to allocate money to promote our green sustainability objectives, our social objectives, to create low-income housing, to create a path towards our economic equality. This is because the current system doesn't have an incentive. Quickly on the motive on AB 857. So AB 857, the California Public Banking Act, was a bill that we passed at the end of 2019. And the motivation behind AB 857 came from our collective vision as grassroots activists in California to create a bill that would streamline the process and create a framework for public banks in California to be regulated, with the goal of creating a network of socially and environmentally responsible local public banks. And rather than having electeds and activists create separate legislation at the local level, we formed the California Public Banking Alliance to push one bill that would streamline the process. And we are an entirely volunteer-run organization with advocates within 11 cities now, working to build the framework for local public banks. So AB 857, the Public Banking Act, was the first bill of its kind in American history, which meant we had to do a lot of work in navigating not only how to communicate public banking as a new idea, but to also build political capital behind public banking, to move it from something that was unknown into the realm of respectable public policy. We are not the first organization to pass a bill in the state legislature, but what we accomplished was extraordinary, considering a few factors. This was a high profile and controversial bill that faced heavy opposition. We went up against 9 financial lobby firms, and to succeed, we had to move the bill through 9 legislative hurdles and then onto Governor Newsom's desk for his signature. And we did that all without paid lobbyists. And it really came down to a few important elements behind our victory. One was creating an inside-outside legislative and lobbying strategy, coordinating with legislative authors, working from the inside, building a team of policy writers, building out a team of an army of citizens and lobbyists, and working to mobilize grassroots constituent and outreach to help both educate and pressure target legislators. And these were some of the components, along with the collaboration between us working on the outside as activists and our legislators working from the inside. Those were some of the parts that were critical in this historic win. And that is how we succeeded in turning a new, a bold idea in the 5th largest economy in one legislative session. That's how we turned that idea into a law. We won by out organizing and out lobbying the big banks in a bottom up grassroots fight. So now that public banks are legal in California, what does that mean? No banks in California have been approved yet because the DFPI, which is the state's regulatory agency, the Department of Financial Protection and Innovation Agency. They've not yet finalized their regulations. So we expect this to be done by the end of the year, at which point cities like SF and Los Angeles can begin the process of submitting the business plan, their public bank business plan for approval. And what AB 857, the California Public Banking Act, did is it created a legal and regulatory pathway for local agencies, licensing framework for local public banks in California. The bill does a few things. One, it restricts public banks from competing directly with existing local financial institutions, but it allows them to partner with community banks and credit unions to be able to provide services and to make loans. And the law requires local agencies, which are cities or counties, to build a business plan and a governance plan and first seek approval from the local governing body and then from the state's regulatory agency. So there are multiple steps that cities have and counties have to take before a public bank license is granted. In LA, our LA Measure B campaign would have changed one section in the city's charter to allow the city to move forward with public banks. But now with AB 857 in place, the California law states that charter cities like LA and SF do not have to hold a referendum vote to be able to create public banks. Public banks are legal in the state of California. In Los Angeles, the LA public bank motion was unanimously approved in May in the Economic Development and Jobs Committee. And the motion will now head to full council, and we're working on getting it now agendized and scheduled by Council President Nuri Martinez. And once passed, that motion is going to give the city the green light to release an RFP, a request for proposal, that will instruct the chief legislative administrator, the city CLA office, to report back on their selection of a consultant or consultants within 2 months, who will then begin the work to produce the LA Public Bank business plan and governance structure, which the city will use to apply for the bank charter. And this business plan will lay out how the bank will be capitalized, what kind of lines of businesses the bank will participate in, the loans, the financial products. It's going to address how this bank will be economically viable for the city. And the RFP also includes a public engagement process where the consultants will engage in community stakeholder consultation. And Michael's report will be an important part of kind of guiding the trajectory of the conversation and help inform cities and the city and consultants on the design and priorities of a democratic public bank. In San Francisco, they recently approved a public bank resolution and in the process of forming a task force by the end of the summer. 10 cities in the Central Coast are working to form a regional public bank as well. East Bay is working to form a regional public bank as well. So multiple local governments are working together with advocates in California. It is really now inevitable in California. Public banks are on its way. In addition to creating local public banks in California, we're also working on Assembly Bill AB 1177, the California Public Banking Option Act. And what this bill would do, it would create the first state mandated program to provide free basic banking access for all. Right now in the United States, 1 out of 4 are unbanked or underbanked, which means they don't have access or adequate access to a checking or a credit account. And AB 1170 creates a truly free bank account, a simple way to do simple debit transaction without extractive banking fees. That's zero cost, zero fee, zero penalty banking, which is especially important for poor people and Black and brown folks who've been shut out of the banking system and have to turn to alternative financial services, predatory payday lenders for basic banking. So this will provide the access and the coverage we need, especially for marginalized community. And it's an important step in democratizing finance. So as we're working on rolling out these city-owned public banks, we're also working on AB 1177 to bank the general public. And I'll wrap by saying it's now over a century since the Bank of North Dakota was formed, and we're seeing now the emergence of the modern public banking movement. And we are grateful to the Democracy Collaborative collaborative, like Brennan and the great minds who are on this call, who've helped us define this volunteer-led movement and working to transform one of the most powerful industries on the planet. Public banking is about redefining what finance means. It's about redirecting the flow of money and capital from a profit-based system to a new system that is centered on human needs and sustainability. I think that instrumental to creating change, and I'll paraphrase Buckminster Fuller, is rather than fighting an old and outdated system, it's about focusing our energy towards building and organizing a new system that will one day render the old completely obsolete. And I believe that really is the key to transformative change. Cities have always been at the forefront of policy changes that are not only fundamental, but vital to people's lives, whether public schools or public hospitals, public airports or public utilities. And we truly believe that public banking is next. Thank you.
Thank you so much, Trinity. So much exciting stuff happening in LA and California as well. Next up, we're going to go to Naveen. But first and foremost, I just want to say the Q&A function is open. There are already a couple of questions in there. Hopefully we'll get to some of the questions in the forthcoming presentations, but also feel free to add your questions and we'll have a section at the end for question and answer. So Naveen.
Hey everyone, can everyone hear me all right? Great. This wouldn't be the first time where I just talked for 10 minutes with nobody being able to hear me. Hopefully this has been interesting to everyone here. I want to be brief so that because we have a great group of folks, and I also want to recognize the folks I'm sharing this virtual stage with, especially Michael Brennan for all his work on this paper. I also want to recognize Trinity. If you couldn't tell from what she had to say, from her remarks, she has been kind of a lot of the life force of the public bank movement in Los Angeles and in California. And with that, just to introduce myself, I come to this movement via Hannah Apple, who is in our audience, who was a lead activist with the Occupy movement. And I was working in affordable housing. I work in affordable housing, an industry that is basically dependent on 90% of our affordable housing that is being built using tax credits, which is to say that it is funded based on bank or investor appetite to reduce their tax basis. So when tax reform happened in 2017 and the corporate tax rate was cut from 28% to 21%, suddenly banks and investors had a whole lot less appetite to make affordable housing. I say that just to illustrate that we have a market-driven solution, a set of solutions to get to social good. And that is what the public banking movement is trying to disentangle and trying to kind of correct for. It's going from a divestment framework to an investment framework. All right, we know that the city of Los Angeles shouldn't bank with Wells Fargo, but Bank of America isn't exactly that much better. Arguably not at all better. So understanding what other options and creating another option, I think is the kernel at the seat of this movement. I have a few slides I'm going to try to get through rather briefly. Can you see my screen? Great. Let's see. One of the things that becomes possible with a public banking framework is a Green New Deal. And generally speaking, infrastructure projects are financed with bonds. That's a way of saying the city is issuing debt to private investors, like largely banks, multinational corporations. It is paying back that debt on a 3% loan. Basically, you end up on $1 million, you would end up spending $500,000 over 30 years. Just in debt service, right? Because that's how interest works. So it is paying back debt with taxpayer money to typically non-local, international, corporate interests. That's largely how the market works. What the bank has the power to do is to facilitate the issuance of that debt, which especially for smaller districts like school districts can be very costly. You're talking about 10%. In California, it was up to 15% for one school district, which means that's just money out the door immediately. And then it can eventually, when it has the capacity, buy that debt, which means that that taxpayer money that is going to pay for debt service to international banks can now stay within public coffers. That is an idea I've heard described as fiscal recapture, basically keeping that tax money local. And I think that's enormously powerful and enormously important. I think one of the questions that I noticed was asked was around equity and how do we define equity. In California, there is a proposition that we tried to overturn last year that basically bars affirmative action. That said, in California, there's also a law that specifically prioritizes low-income communities and communities that have disproportionate environmental burdens. So when you're talking about equity, you're talking about communities that haven't been given the same set of resources, and individuals that haven't been given the same set of resources in California as well. There's 400,000 people who go to a payday lender more than 10 times a year. So it can be a small set, and it's often an overlapping set of folks who haven't been given the same amount of resources and the same opportunities to succeed. And you can slice it and dice it in different ways. It is often a racial line, right? And we've seen that through historical redlining, which was initially a governmental effort, right? But to be clear, to put a finer point on it, how this bank can function is by creating direct underwriting standards that support lending for low-income communities. That's something there's a California bank that does just that. And basically what you're doing is you're creating capacity for the existing lending institutions to do more loans that are exactly what they're doing by buying more space on their balance sheet. Housing, I spoke to this briefly. There's basically a big gap in a lot of our housing needs. Pre-development financing is a big one. Tenant opportunity to purchase. These are things that banks don't typically want to finance. They're not inherently risky, especially when it comes to affordable housing. It's one of the safest asset classes you can imagine because everybody needs affordable housing. But most banks just want to do mortgages. They don't want to be doing like pre-development financing. They don't want to be supporting necessarily tenants trying to purchase their own apartment. So I think that there is this kind of product mismatch that also goes a long way toward creating more social good by meeting a need that banks aren't really interested in meeting. Small business lending, this is kind of, again, of the same ilk around targeted underwriting standards. You can say to a local financial institution, I want to support loans to businesses with under 50 people. I want to support loans in underserved and underbanked communities. You can create a standard, and then that other institution can go out and make more of those loans with your guarantee. Just think about what would happen if Los Angeles was able to use some of the $1 billion, there's over $300 billion that went out to different city and state governments. If we were using that money to guarantee lending, you have a much bigger multiplier effect because you don't need to guarantee the whole pool. You're guaranteeing a small, basically the first loss position, maybe 10%. That's how you get to that 10-to-1 leverage that Trinity was talking about. Lastly, this is kind of clear. A lot of the money that's coming out to from the federal government is being spent one-off for consultants, for specific housing projects. It's not scalable. Even the tax revenue that the state of California has had this year is not scalable insofar as we're not relying on it. This public banking is inherently a way for us to make tax dollars go farther without needing to charge more taxes. It's about local control of our funds rather than supporting an existing financial market that is fundamentally extractive towards both individual like retail banks and folks who bank there, as well as city government, school districts. And this is all stuff that I think makes sense inherently. I think a big part of what our movement has been, and a big part of what I'll let the other speakers in this group move to, is understanding that this complexity is no accident in how we fund so much social good. It's not an accident. It's designed to be esoteric, and it shouldn't be. We should be expecting more from how we finance these projects. And with that, I will hand it off. Sorry again to be over time as well, but thank you all for for listening, and I'm really glad to be a part of this conversation.
Thank you so much, Naveen, and thank you for answering some of the questions that were in the Q&A as well. Now we're going to turn it over to Tom Marwah, who's our resident international expert on public banks.
Great, thanks so much, Thomas. And it's a great pleasure to be part of this group and to have contributed to some of the ideas and input that's gone into the Public Bank LA report that Michael has done, constructing the democratic public bank. My name is Thomas Marwah. I'm a reader of development studies at SOAS University of London and also a senior research fellow at the Institute for Innovation and Public Purpose at UCL in London, though I'm Canadian by descent. I now live on the other side of the pond. Today, I've been asked I'm going to share my screen here, speak a little bit to the bigger picture of public banks. Let's hope that goes to full screen. Why is it not going to full screen here? There we are. Drawing on my own research on public banks that I've been working on for a number of years now, it has just come out in a new book, Public Banks, Decarbonization, Definancialization, Democratization. And to sort of just emphasize some of the, I guess, larger international or global lessons that we can learn from public banks when we're looking at it from a, let's say, more progressive lens of what public banks can do for the public good, to address questions of social inequity, to direct equity, think about the climate, think about democratization in particular. And there's three sort of messages I just want to share with you today in the 10 minutes or so that I have, that there's a world of public banks out there. There are many, many diverse forms, and that should be part of this discussion, that it's nothing necessarily novel that's being proposed in California and the US, but it's something quite typical actually around much of the world. There are many ways of being democratic, and that it's not necessarily an odd thing to attach the term democratic to bank, let alone public banks. It's not necessarily connected by any means, but it's certainly not an odd practice. And finally, to think a little more theoretically in a sense, but to suggest that public banks or banks in general are more dynamic than typically thought, insofar as the way in which we address them, the questions of change, how we can make and remake public banks. So the first message I just want to share with everyone, and thank you for coming and attending, is that there's really a very wide world of public banks, including various forms of retail commercial banks, ones that accept deposits, in sort of the corner of the street, development forms that are more targeted to larger projects, to infrastructure, municipalities, that sort of thing, to universal public banks that mix both the sort of checking, deposit-taking functions with the larger developmental initiatives and planning and structures and so on. So there's many, many different forms of them. But there continue to be, despite 30, 40 years of privatization and neoliberalization, over 900 public banks around the world still in existence. And in fact, in many places, those numbers are growing. They have a combined pool of assets in excess of $49 trillion, which is more than 10 times the amount that the UN typically associates with public banks. So it's absolutely enormous, the existing capacity out there. But as important as the numbers of institutions and the amount of money that they or amount of assets they hold within their walls, is that these institutions also come with an accumulated expertise in financing, in development, in engagement with communities, and in finance in general. And that with that comes institutional legacies. And in many ways, this is what we see at some of the really more positive examples of public banks around the world, not just the example of the Bank of North Dakota in the US, but ones I'll speak about shortly elsewhere in the world, is that there's an enduring element to these institutions that must be started at some point, but then continue to build and evolve and to shape in better and worse ways. And democratization then is a key element of that. And finally, to sort of hammer home the point that there is nothing new to public banks. It might be new to California, but they, in different forms, public banks have been around since at least the 1500s, including in the US, going back to the Pennsylvania land banks. But as Thomas Hanna had mentioned, really resurgent since the crisis in 2009, but equally so in terms of the environmental crisis, the ecological crisis that we're facing, that was sort of noted in the SDGs of 2015 and a sort of push towards reclaiming or rethinking the role of public banks in that transition. The next kind of key point then is the many ways of being democratic. And I want to talk about specific institutions here. And one that is the sort of touchstone of the public banking movement in the US, for better and for worse, is the sort of sole state level public bank, the Bank of North Dakota. And its form of, let's say, democratization, or what I would say a form of political representation, is that it has a 3-member governing board that's composed of the governor, the attorney general of the state, and the agricultural commissioner. And that's, they also have an advisory committee, a 7-member advisory committee that sits alongside that governing board, and that they report then back to the legislature. So in a sense, it is a political form of representation, and it is accountable to the citizens of North Dakota, but it is very much a form of representation. And with relatively little sort of direct stakeholder engagement or citizen engagement in the bank, or, you know, not sort of a, let's call it, baked in form of substantive democratization in the bank. So there's certainly room for improvement in that. And we can see it in the ways in which it has dealt with certain crises, not least of which the Standing Rock crisis, when the bank was called on to fund sort of police repression of protesters. These are the kinds of things that I would hope I would see in a more democratized bank not happening, that they would sort of hold that bank to account. A second sort of form that I often talk about is the German development bank called the KfW, the Bank for Reconstruction and Development, formed in 1948 out of the sort of scars of World War II, and with US Marshall funds, actually, you know, funds flowing from the US into Europe to help rebuild war-torn Europe. And instead of directly spending the money, and there are lessons here, as Michael points out in the report, for the US, instead of directly, you know, spending those funds, they decided to create a bank. It's called the KfW, which has now emerged as essentially the largest sort of state-level public bank in Europe. It has $600 billion in combined assets. But the point I want to make with this bank is that it has a quite robust form of representative democratic governance, where there's a board that has 37 members on it. It's chaired by 2 ministers of the government, the Minister of Finance and the Minister for Economic Affairs and Energy. And then it's populated with a whole range of different citizens and stakeholders, from lawmakers, from the legislative branches of the German government, to civil society representatives, unions, SMEs, other banks, and so on. So there's quite a diverse range of individuals involved in the accountability and the transparency and the goal setting of the bank. And it's quite impressive. And it's in many accounts, though certainly it's not a perfect bank, there is no such thing as a perfect bank, public or private. You know, it is considered one of the, you know, top examples of a sort of public bank, you know, how it functions accountably and transparently. The third example I want to speak to quickly then is the Banco Popular de Desarrollo Comunal, of communal development, Popular Banking of Communal Development in Costa Rica, which is a universal bank that is 100% worker owned and controlled. And it is, in my opinion, the most democratic bank in the world. And what makes it so is that it has, at its peak of governance, a 290-member workers' assembly that provides the overall direction and oversight and, you know, accountability form for this nationwide bank in Costa Rica. And the members are composed from 10 different social sectors, in Costa Rica, who then send their representatives to it. And then out of that workers' assembly, they then form the board of directors, essentially, of the bank, which is composed of 4 members from the assembly and 3 members from the ruling government. And that's that board then sort of deals with the more day-to-day strategic operations of the bank, mixing both very clear popular representation of the society alongside with a connection to government. And if I could make a point across all of these, I think there's enormous room to rethink the ways in which banks and democratization can and should be mixed with political representation in government. How do you connect the wider aspirations of society and its elected officials with institutions like banks? It's a very difficult and potentially fraught process, but it would be a mistake to think that there is any bank, public or private, that isn't political in one way or another. So let's make that open, let's make it transparent, let's make it accountable, and create those forums that enable that. Finally, I just want to touch on the sort of bigger question that public banks, public sector in general, is quite often thought of as a very static, boring kind of sector. But just to make the point that the public banks are far more dynamic and contested institutions than it's commonly thought, and that we need to rethink them as such, because they exist as contested institutions in class-divided, gendered, and racialized societies. And so we need to accept, in the process of creating public banks and reclaiming them in some instances, like North Dakota and elsewhere around the world, that these banks evolve because they're socially contested, not necessarily in a good way. These are class-divided forces. It is absolutely the case right now in the question of sustainable development that the private financiers that you were speaking about earlier are very much motivated by around trying to capture public banks for private purpose. The motivation of Public Bank LA is to create them in a way that enables them to realize public purpose. So the diagram there is talking about how social forces, class divided, gendered, and racialized, inform the functions of what a bank does, for better and for worse. And that is what gives meaning to the bank, not simply that it is publicly owned, not to fetishize the question of ownership. So function, what a bank does is more, it should be set prior to its ownership form, in a sense. The public doesn't guarantee anything. There's nothing ultimately good or bad, or pro-private or pro-public about a public bank, but that has to be made and remade in the context of a society. And hence, this is the absolute key point about the need for substantive democratization. What Trinity has been talking about, what Naveen has been sort of emphasizing, is to then bake into that bank means by which we can hold it to account and hold it to be transparent. And if I could say, that is really the most important message in rethinking them as dynamic institutions, is in fact the most liberating element of the sort of rethinking of public banks, because then it sets social forces at the center of making that bank what it can be and what it should be. So thank you very much, and look forward to everyone's questions.
Thank you so much, Tom. Thank you for that really detailed look at some of the public banking examples from around the world. Next, we're going to turn it over to Rohan Gray, who's going to, I think, zoom us out a little bit and talk about public banking in the context of public finance and public money. So, Rohan.
Thanks. Can you guys hear me okay? Yep. Well, thank you very much for having me. It's a pleasure to be here, and it's a pleasure to be with such great people. I've had the opportunity to work with, I think, some of you or most of you at this point, and it's just been absolutely fantastic to watch how you've taken these ideas and actually kind of turned them into reality and got, actual legislative change, actual public interest in these often very esoteric concepts. I'm a law professor. I focus on the legal design and regulation of currency and finance, with a particular focus on digital currency. I also have helped co-author a number of pieces of federal legislation. In this context, most importantly, the Federal Public Banking Act. I'm a big supporter of public banks. My nonprofit, the Modern Money Network, is co-led by my colleague Raul Carrillo, who was one of the sort of lead involved people with the New York Public Banking Act. And we've just had some of our work mentioned in this hearing today that's going on at the same time. So it's a great world when there's multiple public banking activities on at the same time, because there's so much interest. I want to offer kind of two provocations today, or two different kind of points that coming with love and coming with support from the movement that will hopefully kind of add what I think is a sort of macro perspective or a monetary perspective to how we think about public banking, and from there to sort of try to clarify a little bit of exactly where public banking fits into a larger progressive monetary reform agenda. And I want to sort of start with this line that Hyman Minsky, the monetary economist, used to use a lot, which is, anyone can create money, the challenge is to get it accepted. And I like this line because it sort of really centers power. It really centers sort of where money comes from in these fundamental questions. But it also works on two different levels. There's where does money come from in the sense of creating more of it? And there's also the ability to actually create types of money, physical types or sort of virtual types. So the ability to create money is not just sort of in an economic sense, but also in a material or technological sense. On the first question, this idea of kind of lending, you can hear these different levels of how people talk about bank lending. The sort of most crude example, if someone has never sort of studied banking before, is this idea that you have money in a savings account and somebody lends out that money. It's sort of a fixed pot. There's only so much sort of fixed savings in the economy. Then there's this idea of sort of, well, we can take a certain amount of reserves and fractionally lend that out to some multiple of whatever the original amount in reserve was. And the sort of next level beyond that is to recognize that in a system with a central bank and a target interest rate like we have, bank lending is largely constrained only by the profitability of loans and by the sort of capital base of the bank itself, which is really only a function of regulation. And I want to just give a kind of hypothetical just to make this point really, really clear. Imagine if there was no, capital requirements other than sort of being safe enough not to go under. And somebody came along, there was no deposits, you just created a bank completely brand new, no one had deposited a single dollar in there, and someone comes along and says, I want $100 million loan. Can that bank make that loan? To me, the answer is yes, if that bank can get that loan then pledged at the central bank as collateral. And the way that we have set up the central banking system in the United States right now is all sorts of collateral can be turned into liquid funding from the central bank. Secondary market securities like mortgage-backed securities, student loan-backed securities, all sorts of primary loans, mortgages and things through the discount window, even though most commercial banks don't use that very often today. And nowadays, even things like commercial paper, repo, what they call repurchase agreements, things like that. So there's all these different kinds of ways in which a bank can make a loan, and in doing so, make new money. And the only thing it has to worry about is how can it offload that asset to someone else? How can it take that new created loan and have someone else be responsible for the risk? The reason that this is important is because it starts getting you out of the realm of sort of thinking about credit and into the realm of thinking about creating money. If you can create $100 million out of thin air to finance something, as long as the federal government is willing to backstop that loan, then you're really starting to look at banking alongside general public spending that creates new dollars. If somebody says, okay, we want to create $100 million new public investment, and you say, well, how are we going to finance that? One way to do that is to create a loan. The other way to do that is create a spending program. And so now we get into this really important question, which is, when is it better? Not even just better, when is it necessary to finance something with public spending rather than with public lending? Because I'm a big supporter of public banks, and I think it's really, really important that we transform the way that credit is extended. But at the very same time, there's also this tendency in a neoliberal world like the one that we live in to do as many things as possible through credit instead of through spending, because it's easier, because it's faster, or because it fits into this neoliberal frame of kind of let them eat credit, do things through banking that really should be done through direct public investment. And there are some problems with that, in my opinion. One is it limits the kinds of spending to things that are likely to have a positive or at least break even return on investment. I don't think we should be looking at, for example, higher education as something that should generate profits. But if you are trying to fund higher education through a loan-based model, even if those loans are funded through nonprofits, for example, they still need to be repaid in a fundamental sense. There's still going to be limits to the kinds of spending that's undertaken based on whether it's likely to send money back to some degree. We also get into this question of who is thinking about these questions, who is in charge. When you consider repayment, the goal then, or the sort of language that you're thinking through, is one of financial returns. There may be different parameters to a private commercial bank. I'm sure there would be with a public bank. But the fundamental question, the way that the loan is looking, is still going to resemble a balance sheet statement where you're prioritizing repayments, things like whether or not there's a risk of loss on the loan and those kinds of things. And at least in my experience, in other areas of public policymaking, it's very, very, very hard to prioritize abstract social values over the values of a repayment. If you're talking about a loan that is likely to be unprofitable, or say only 10% as profitable as a different loan, but it might be 50% better for social causes, one of those is going to look like a hard number on the page, and the other is going to look like something else. And in my experience, that's going to create a bias towards loans and investments that have at least a decent, if not high level of repayment. We should be very, very careful as we advocate for public lending not to sort of end up prioritizing things that are more likely to fit within a lending framework. The other quick point really quickly is the idea about the money that gets created. I'm a big believer in public bank accounts, Fed accounts, postal banking, and public banking, I think, can all work together. But there are also limits on bank accounts themselves. Bank accounts are a centralized system where individuals have to have an account with a third party who then is going to be subject to privacy limitations, to know your customer and anti-money laundering laws, things like that. Which means that if you're somebody who's interested in privacy, or you're maybe want to engage in activities the federal government isn't willing to endorse yet, it's going to be very hard to do that through public bank accounts compared to something like cash. Cash is something you hold in your pocket. There is no third party. No one can censor the transaction between you and somebody else. So when we think about how financial inclusion is likely to work, it's very important, again, to know the limits of account-based thinking and to not conflate what an account can do with what something like cash or digital cash can do. When we think about how to encourage trust and get people using sort of digital financial services that otherwise don't believe in banks, one aspect is that these banks are private and profit-seeking, but the other aspect is that they're still banks. And so we should just be thinking about where public banking fits into a framework that includes things like cash on one side and includes things like spending on the other. Because anyone can create money, the challenge is to get it accepted, and there are going to be limits on acceptance of public banking, some unjustified, but also some probably quite justified. Thanks.
Thank you so much, Rohan. Really, really great provocations that I think the public banking movement is engaging with on multiple levels. And I think Michael might have something to say about some of that in his paper. So I'm going to turn it over to Michael, who has, as we've mentioned a few times, written this fantastic paper on the potential governance structure of a democratic public bank. So Michael, over to you.
Great. Yeah, thank you. And before I get started, maybe just kind of to level set a little bit in terms of kind of even just responding to Rowan, because I think it's really important as kind of we're gathered here as a public banking movement to understand, I guess, where we're at within kind of the broader context of these issues, right? I think we're all the stronger for it. I think by recognizing the role that public banks in particular should play within this future of progressive public finance, right? And I think that was, as maybe a dissenter, kind of the provocations that Rowan might be bringing up, I think are really critical to include in the conversation about public banks as we're talking about it, right? So as we're talking about these other issues of public finance, I think we're, and because of the specific issues around public banks of like the constituencies that are building around it, I think bringing those together will make both sides of those equations stronger. So I hope that came out in that part of the conversation. And that being said, and also kind of bring out Tom's point, I hope that this can kind of move us closer to what a more critical view of public banks can look like, and what a more dynamic view of public banks is going to look like for activists, practitioners, especially as these public banks get underway and we start to actually have to, think about quote unquote left in power, or like the banks in power, right? In terms of like our ability to move them forward and make them better. So setting that up, I wanted to start with naming this conception of a democratic public bank. So it would be a publicly owned bank that achieves economic, social, and ecological purposes through democratic multi-stakeholder governance. This basic setup lets us evaluate public banks as better or worse. Probably most importantly for public banking advocates here in the US, as we've talked about, we can kind of use this basic framing to consider, for example, the Bank of North Dakota, how it achieves its purposes and how it is governed, right? And there are two main ways in the proposal that I try to set this up. There's kind of the functions and the forms of the bank. So the purposes are the functions, what the bank does and for who, and then the governance structures are the forms and how those purposes are derived over time, which I'll get into next. So the purposes, the why of the public bank, here we have a strategic framework to start understanding how it can work. So the mandates are the political agenda of social challenges for the bank to address, which to Tom's point is socially contested in a class divided society. For a bank whose purpose is not profit explicitly, this is essential to define, right? And it's inherently political, it's inherently contested what that political agenda is, right? It's political, but it's important to name that and name that as a framing for what the bank is doing and why. So then the missions of the bank would turn those mandates into concrete strategic objectives for achieving the mandates. So people who have done strategic planning before, any type of kind of strategy work, setting up strategic objectives is essential to your ability to achieve your purpose as an organization or institution. And then the programs are the actual financial products and services that the bank will offer in order to achieve the missions and operationalize those missions. And hopefully all those together can show, if we want a Green New Deal for public bank, right, as kind of part of our broad mandate, how that translates down to the actual things that the bank would be doing in order to achieve a Green New Deal. So now I'll run through the 7 mandates I propose in the paper for the Los Angeles Public Bank. These should give some substance to the setup. These came out of my interviews with the community stakeholders in Public Bank LA. It represents a particular political agenda. So even if you disagree with any particular pieces of it, I hope this framework is helpful, at least for having a more strategic and rigorous view on how the purposes of a public bank should operate. So the first is achieving cost savings. Some of this is drawn directly from AB 857, which, as Trinity mentioned, is the law that created the chartering process at the state level for the public bank. So achieving cost savings was one of the purposes embedded within that law. So as part of that, for example, a mission for it could be reducing the amount the city spends on debt servicing to zero, right? It sets that as a strategic objective, and the bank is operating in order to achieve that. And then the programs it would be doing in order to achieve that mission would be debt servicing for the city, and purchasing municipal bonds and managing public investment funds, including for universities in the area. The next one is to support the city's broader infrastructure, housing, and sustainability goals, such as those in the comprehensive homelessness strategy and the county's 2019 sustainability plan. The mission here, I didn't really list out all of the different strategic goals that are embedded in those documents, but this is just to say that a public bank can be a tool for already existing comprehensive strategies of the city of Los Angeles and the county. And here are different ways that it can do that. It can underwrite and purchase municipal bonds for capital projects, can finance the development of already publicly owned land and properties. It can streamline and consolidate existing financing sources. It can provide specialized financing for social housing, smaller scale affordable housing, which has a gap in terms of its financing options, hotel acquisitions, and housing preservation. And importantly, can also offer lines of credit, operational lines of credit to for pre-development and acquisition for the strategic affordable housing development. Next is promoting equitable recoveries from social, economic, and environmental crises. This is especially important in the context of the pandemic, but also thinking a little more long-term as a mandate for the bank in terms of recoveries from the climate crisis and otherwise. And some of these are, I think the missions would need to be determined kind of on the crisis basis, right? Like as an emergency arrives, it's kind of being able to just say, okay, what is our strategic objective for how the bank will respond to the pandemic, for example, or given natural disaster, et cetera. But otherwise, preserving the baseline amount of small businesses and jobs as a strategic objective, increasing Black, Indigenous, immigrant, and community ownership above the baseline from prior to the crisis. And here are different ways it can do that, offering flexible near zero interest lines of credit in states of emergency to public entities and civil society entities, provisioning public services. This is an interesting one, I think, just in terms of there are organizations that are doing mutual aid and filling the gaps of what we want the public to be provisioning in terms when there are crises, and having the ability for those types of organizations, especially more informal ones and gray economy ones, to be able to tap into the public bank to be able to do the work that needs to be done, I think would be essential for the public bank to provide. Something that the Democracy Collaborative has been working on elsewhere in terms of responding to COVID was the conversion of distressed businesses to community ownership. And so this is included here as one of the programs for the bank, including for Black, Indigenous, immigrant, worker public, and our community ownership. Lastly is financing for workers, community groups, and tenants to buy an enterprise or an asset that's being targeted for acquisition. This would be kind of similar to a tenant's right of first refusal or opportunity to purchase, but also in the context of crises. Another thing worth bringing out is Democracy Collaborative's work on community wealth building and the alternative economic development paradigm that through a bunch of different work that the organization's been doing, has been drawing out as kind of a robust alternative. And so if that's one of the mandates of the bank is to build community wealth, the mission could be to increase the number and net value of all these different types of community wealth building institutions. And there are different ways that it can contribute to that. So participating in loans to those institutions initiated by the local lenders for the partner bank, because of what Trinity mentioned earlier on, in terms of working with CDFIs and local banks. Similar to the point I mentioned before, it would utilize what's called the first loss position to provide workers or tenants financing to acquire failing businesses. And what that means is when the bank is partnering with the CDFI or local bank, it can say, okay, we are at the top of the stack, so to speak, of like who's providing the money. And then if some business or housing complex fails or goes into debt or goes bankrupt, the bank can use its position to give the workers or tenants the opportunity to take control as worker or tenant owned asset. And then providing financial and technical assistance to tenant unions and associations for, again, like having the opportunity to purchase property and navigating the public regulations and processes. Next is promoting a just transition to mitigate and adapt to the consequences of the climate and biodiversity crises. This is a long way of saying dealing with the climate crisis. And it can do this by, one, more directly achieving a carbon negative loan portfolio and a carbon negative operational footprint, but also contributing again to the broader sustainability goals already decided for the city. And there are multiple ways they can do this, requiring borrowers to measure their environmental impact, providing relevant technical assistance for them to be able to do so. This is kind of an important one that I think kind of shows the disconnect between for-profit lending and some of the issues around, I guess, sustainable development and like ESG and impact investing, but incorporating climate relevant time horizons and loan risk assessment, right? Because it's a long-term institution, it can take the long view on lending in a much more relevant way to the climate crisis than the short-term thinking of other types of lenders. Getting LEED certification for the physical branch, making sure that when you're procuring, you're getting it from certified sustainable vendors, and then partnering with Los Angeles's Department of Water and Power to provide financing for retrofits, solar panels, EV, et cetera. Next is repairing the historical harms to Black, Indigenous, and immigrant communities. And I think it's important to name reparations as a part of the mandate of the bank. And what that would look like here would be increasing the number and net value of local Black, Indigenous, immigrant-owned businesses and homes, and the number of cooperatives and community-owned assets. So this is relevant to community wealth building, but just getting a little bit more specific, and also providing specialized financing for community land trusts controlled by different Indigenous communities of the Los Angeles area, especially for land-back strategies. It would also, importantly, I think, do technical assistance to make sure that this stuff is accessible and navigatable for people. Relevantly, also providing specialized financial services to street vendors and unincorporated small businesses, which currently have importantly a lack of access to these different commercial services, and then potentially creating a reparations fund that part of this would go into, and to Rowan's point, even having rather than embedding that into a lending logic, turning that more so into a direct transfer logic. And lastly, this comes from Tom Marwah's his book and some of the thinking around it, but it's important to name achieving financial sustainability as a mandate versus profit seeking, and saying that profit seeking is not the purpose of the bank, but the idea of financial sustainability being the ability for the bank to reproduce itself into the future on an ongoing concern, which is distinct from profit as a purpose of the bank. And that would just be balancing any return on investment with the success of other mandates and establishing and meeting high standards with regards to financial transparency and auditing. All right, so that was kind of the mandates, missions, programs framework. Just wanted to run through that verbally, but like that's all in the report, and just to make sure that it's articulated for everybody here. But next, we're going to move into the structures of the bank. And I apologize for the timing. I do want to try to leave time for Q&A, but you know, there's a lot to this. But so here we have the overview of the governance structures of the bank. At the top is the LA City Council, and above them are obviously the voters. Because the City Council will create the bank along with the city attorney, as well as the Department of Financial Protection and Innovation, who has to approve the bank charter submitted by the city. They retain the implicit governance authority to make changes after the fact. But the idea here is to devolve authority to the structures internal to the bank. And it's also worth mentioning that this is narrowed to sole ownership by the city of LA, but there's interest in a joint ownership model with charter cities in the county, which is part of Public Bank LA's current outreach and strategy. But this model that's elaborated here could be expanded in theory to do that, and we can explore that more later on. The main three interlocking governance mechanisms here are the General Assembly, the Board of Commissioners, and the committees. The Board of Commissioners and the operational divisions, just to name it, would operate similarly to a bank, right? The board oversees the senior managers of the actual operations of the bank, and then they can operate on a day-to-day basis, mostly independently. But they would follow the mandate or the command set by the board. So the General Assembly, which is probably the most provocative part of this in terms of thinking about democratic governance, would essentially be a people's shareholders forum, right? In terms of the way that people gather annually to hear from the board and have the annual report of a bank typically. And it would be the primary decision-making forum of the bank. It would be composed of 99 members selected through a lottery process. The lottery process would be where in every single neighborhood council jurisdiction in LA, which is a unique participatory form of local government that's unique to Los Angeles, people could submit themselves for a nomination to serve on this General Assembly for 2 years, and then people would be randomly selected to join. And then they would go through a year-long process ahead of time in terms of getting educated on the bank, going through kind of an onboarding process and an orientation to be able to participate in this. And that would be part of the bank's operations, would be doing that education work with people. And there's more detail about this in the paper, so I don't want to harp on it too much, but I think it's a really important aspect to the governance proposal here. But it would convene annually, and it would review the proposals agendized by the committees. And so that's how the decision-making process would be situated. So in between the assembly each year, the Board of Commissioners would convene to represent the public. It would have fiduciary responsibility for the bank. It would be composed of 9 commissioners with 5 appointed by the General Assembly and 4 appointed by the City Council. They would serve for 5-year terms. They would meet at least quarterly to receive the reports from the different committees and the senior managers. They would create the annual report. The ones that would create the committees, they would hire and fire the senior managers, designate the committee chairs, and monitor the operations. One commissioner would chair each of the committees, and they would essentially be the committees would come out of the board in this way. And then the committees, importantly, are 5 members, one of the commissioners as the chair. The assembly would appoint 3 of the members directly, and then 1 bank employee would also serve. Someone who's actually a staff member of the bank would sit on a committee. If once there is, it would be embedded in the bank's governing documents as part of the City Council's move to voluntarily recognize a staff union for the bank, and then that union would be able to appoint members once the union is established, if it is established. So 3 types of committees, just as kind of a general schema. We can create mandate committees. So I laid out 7 earlier, and then these committees could just be responsible for coming together and saying, how are we achieving this mandate? What are our missions? What are our programs in line with a specific mandate? Generally, boards have operational committees. So that's like risk, auditing. There's different policies that banks will set, and that can be situated within an operational committee. And then also there's kind of an innovation here around special committees, where if the board sets up a specific special committee for a given issue or a given stakeholder group, that can provide representation and expertise to the bank on relevant policy. So you could think of like, a co-op special committee. They would be able to agendize proposals for the General Assembly on issues relevant to cooperatives in Los Angeles, right? And the board would have the authority to situate and like create formal representation for different stakeholder groups within this. It's a very broad idea, but like could be applied in a bunch of different positive or negative directions, right? So setting that up. And I'll try to just, wrap there, I guess, but that's the proposal. The graphic here is kind of the full view with all that information. It's in the report, so you have access to it. I think you just shared in the chat, and there's a full description included there. But hopefully this helps open up ideas about how to do institutional design, having a more comprehensive view about who our new public banks are serving and how. And yeah, I thank everyone for joining, and I'll pass back to Thomas to open us up to the question and answer.
Thanks, Michael. Really appreciate all the work that you've done on this report, and I think we put links into the chat so people can find it. I realize that we haven't left too much time for Q&A, and we definitely want to be respectful of everybody's time as well as our speakers' time, but we have a few minutes, so I'm just going to direct some of the questions that are in the Q&A to some of our speakers, and we'll try and wrap, right around 1:30 Eastern time. So first of all, I'm going to direct one question to Rohan, and this is directly related to the question in the Q&A about where do you see the role of public banking fit in, especially state and local public banking, into this sort of larger schema that you have presented. And then after you go, I would just maybe turn it over to Trinity to wrap us up by maybe addressing some of the questions related to what equity means for Public Bank LA, and also regarding this question about debt and what the public bank in LA will be thinking about with regards to profit and how it's going to be balancing social aspects versus financial aspects. So Rohan, can you take it away?
Yeah, sure. So the first thing is, accounts are good, and having accounts that people trust that aren't trying to predate on them is a good thing. So in that respect, expanding access through accounts is an obvious and great aspect of public banking. Public banks can also hold deposits on behalf of governments, as we've heard today. And I think that's also really important because that reduces the cost of funding for those governments. It reduces the cost of payment services, and it allows for those governments to use that float basically as a form of cheap credit. I often talk about the fact that Starbucks, for example, has $3 billion of outstanding gift cards right now, which it pays 0 interest on. So for a massive multinational corporation, the cheapest form of funding it can possibly get is to have people hold its funds as payments instruments. And so if you can have a public bank that people use as a generic payments instrument that, you know, they use for the Metro card, they use for all sorts of retail local payments things, that can be a way for cities to effectively issue a form of financial instrument or debt or whatever else that could be much cheaper than what they could get in the municipal bond market or anything else as a form of cheap credit. And there are some aspects of public investment or just general investment that are better to be done with lending if they're not sort of mission critical or that they may involve private actors. So that kind of thing is obviously much better to transform and to make kind of credit extension done on terms that more explicitly serve the public interest. I think the last big obvious example is just as a short-term political thing. You know, there's benefits in mobilizing people around this, even if it's not the best way to achieve whatever, you know, whatever is being proposed to be financed. And in that respect, you know, I've got infinite good things to say about the public banking movement who've got people on the ground across the whole country interested in these really fundamental questions about where money comes from and where investment comes from. My sort of provocation is really just about being careful not to conflate sort of having a hammer and then thinking everything looks like a nail, or kind of, you know, looking for your keys where the light is, those kinds of thinking where this is a good thing, but we, you know, just being sanguine about where those limits are. So I think probably the overall kind of framework would be try to think about as a long-term matter, where public banks would fit in if every time you were going to make a decision whether or not to finance with a public bank, you could also finance just by creating money and then sort of taking it out. If there's reasons why it makes sense to lend, and let's make sure we have good public lending options. But if it's actually better to do that other thing, and we're only choosing lending because it's sort of closer to the realm of the possible, then we need to be able to walk and chew gum at the same time, in terms of being able to push for a short-term strategy that's good in the short term and recognizing that it may actually need to be addressed in the long term in a different way, and to think about those two things in parallel.
Thanks, Rohan. I think Naveen is going to take the questions about equity and maybe compound interest. And also there's a question, and I'll leave this up to the panelists. If the panelists would like to put their contact information in the chat, there's a question to do so, but you don't have to if you don't want to.
I think Naveen and I can tag team the equity questions. What I often think about when in terms of racial equity and public banks is something that Angela Glover Blackwell has said about banks, that they are the underwriters of racism. So public banking is a way to create a publicly owned banking institution whose mission is to serve the people and invest in education, healthcare, affordable housing, instead of diverting, and racial equity, instead of diverting the huge portions that our local governments pay towards paying back loans and with interest. And when you look at Wall Street banks, they've long engaged in discriminatory and racist practice against communities of color. They've engaged in redlining, where people color discriminated against and denied loans, who couldn't access funds to ever buy a home. And these lending priorities have been based on the color of skin and where you lived. And then there's reverse redlining, where you're a minority with bad credit, you have a target on your back and your interest rates are high, so that you'll never be able to pay it back, and your home gets foreclosed on. And owning a home is an example of how you accumulate wealth, and getting shut out of access just exacerbates the racial wealth gap, and exacerbates poverty. And as we saw in the pandemic, over 40% of Black-owned businesses closed down to the pandemic. So a public bank can really help with expand access through partnership lending. Right, business have loan approval about 20% higher than Black-owned business, because private banks give preferential treatments to customers, and we saw that in the pandemic with the distribution of PPP loans, for instance, where Wall Street banks prioritize lending to businesses that they already had pre-existing relationships with, that shut out small businesses, especially in communities of color that critically needed capital and relief to stay afloat. And so this current financial system is based on real and structural bias, and people living in poverty, people marginalized, disenfranchised, people of color are in this predatory extractive financial system that only perpetuates racial disparity. So we have to find another way. And public banking at least provides us with the opportunity to expand access and inclusion to communities who need it most.
I can speak briefly to the compound interest question. In most cities' cases, when they're issuing debt, you have to find like one investor or a series of investors who are interested in purchasing that debt instrument. My guess is that any public bank would need to continue to pay interest as long as that debt can't be issued only to the public bank. So basically, like you would have to have a public bank that's so well capitalized as to be able to fund, a $1 billion housing bond, and it still likely makes sense just to pay interest on it because it's basically the cost of money. You want that bank to be able to be financially sustainable, right? So I think that interest is likely not to go anywhere, both because this will be not functioning in a public vacuum. It will be a market. It will have to interact with financial markets as well, likely regardless of how large it is. And two, because you need the bank to be financially sustainable in the long run, you'll have to charge some interest.
Thank you, Naveen. And with that, we're right about 1:30. So thank you all so much to all of our panelists. Thank you to Michael for the excellent report. Thank you to everyone who attended today. We really appreciate it. The report is available on our website, and have a great rest of everybody's day. Thank you.
Thanks all.